This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Matt Brugner of Stewardship Partners. Stewardship Partners seeks to acquire one company and care for it well for the benefit of all stakeholders. Matt has a unique investment model centered on the values informed by his faith. Matt intends to operate the business he acquires full-time, giving the exiting founder a win-win succession plan. Matt, thank you for joining us.
Thanks, Hall. Great to talk with a fellow Baylor Bear. Appreciate it.
Looking forward to it. So where are you calling from today?
I'm here in Dallas. As a solo investor entrepreneur, I come into a co-working space, and we've lived in Dallas for about 7 years, so love being up there, not too far from you, Hall.
Great. So tell us more about your background before joining Stewardship Partners.
Yeah, it's been an interesting journey to get to where I am today. I've always wanted to be entrepreneurial, grew up with an entrepreneurial father, wanted to start and lead businesses, and didn't know how that happened or how my career would shape out. I went to Baylor undergrad, sick of Bears, and studied entrepreneurship there, thinking I would start something. Ultimately didn't have an idea I was particularly passionate about. Also did a finance major. So wanted to explore kind of a career in finance before hopefully starting something. That led me to Goldman Sachs up here in Dallas. And my role at Goldman was twofold. In one piece of the business, we were lending money to entrepreneurs. So I got to see a lot of interesting businesses, a lot of different industries, a lot of people who were successfully leading companies. And then another part of the business, we were lending to private equity funds. So I got some exposure to the M&A world. I got to see how deals were done, how value was created after an investment. And both of those really fascinated me. But really at Goldman, I felt a little too far from the action hole. I really wanted to get in the operator's seat, kind of roll up my sleeves and run a business, as opposed to just invest from the background. I wanted to kind of get in the seat of the operator. So I went to business school with the intention of doing that. I went to Northwestern Kellogg full-time during COVID with the hopes that I would be able to come out of business school, raise some capital, and go buy a business. And that's what I've done. So that's how Stewardship Partners came to be. We are a fund of one. The goal is to buy one business. And I've got a great group of supporters helping me do that. But it's been a great journey to get here, and I can't wait to get in the operator seat and help lead a business forward.
Great. So what excites you right now?
There's so much going on in the market right now, Hall. It's actually really interesting. What excites me particularly for, I think, values-based, faith-based business operators. I'm starting to see just more of a focus on using business as a platform to do good for the world. I'm seeing more and more business owners seeing business more as a mission and a ministry than simply just a kind of bottom line net profit. And that gets me excited because I think that creates opportunity for a lot of good to happen. So I'm excited about that. I'm seeing that. I'm also seeing just a lot of need for thoughtful succession planning in the market. So a lot of businesses I think are going to come for sale the next 10 years, a lot of generational wealth transfer, which creates opportunities for someone like me, younger entrepreneurs, to step in and be a thoughtful succession plan for somebody. That gets me excited because I think there's going to be a lot of opportunity for the next generation of entrepreneurs to take over and steward businesses forward. That's really fun.
Great. So you're running a search fund model here. Can you tell us more about what that is and how it works?
Yeah, so search funds are a bit unique. This model was created at Stanford's business school, I think in the late 80s or early 90s. A professor backed a student to buy a business from a retiring founder, and that went really well. And the model has expanded from there really to kind of other top business school programs across the country. And so now you'll see, a handful of folks every year doing this. But the idea is I've raised some capital from family offices, some small funds, some operators who sold their businesses to acquire a business which I will go lead. So it's private equity in the sense that we are acquiring a majority stake in a business. It's different from private equity in the sense that you're really selling your business to an entrepreneur, and an entrepreneur is going to come lead the business forward. Obviously, we're different from VC because we're not taking minority stakes. And sometimes these businesses can be a little bit later stage than what a VC might focus on. So that's the search fund model. My investors will provide me with the capital to buy this business. They'll serve as a board of directors and mentorship for me. And then I'll go in as sort of the day-to-day operator for the transitioning founder.
And so it's different from VC. How is it different from private equity?
Yeah, it's different from VC and it's not investment. It's different from private equity in the sense that, typically private equity funds are building portfolios of businesses and they may place an operator in the business, but you may or may not know who that person is when you sell to private equity. And the deals tend to be a little bit bigger than maybe what I'm focused on average. I'm intending to come run the business full time. And so it's really like selling your business to an entrepreneur, although it's private equity-like in the sense that we are buying a majority stake of the equity in the business, right? And I intend to probably hold for longer than a private equity fund might intend to hold it as well.
Great. Well, you see a lot of startups and investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
Yeah, it's really interesting. And, it's almost odd to use the startup language in this sense because a lot of these businesses are later stage. Although I do look at a lot of B2B software, Hall, and those businesses sometimes look early stage. It may not be an older retiring founder. It may be a younger serial entrepreneur who loves building businesses, loves product market fit, that kind of early stage. But as that business grows and scales, they may be hitting an inflection point in their growth where their role as the leader of that business has changed significantly. And I find sometimes that doesn't work for everybody. They might not want to be the CEO of a $5 million ARR business anymore because maybe that's not what they're good at or that's not what they like doing. The job changes. And so my advice for people who are running a search or thinking about what it might look like to invest via this model in early stage software companies is to look for that founder that may be hitting a growth inflection point. Maybe their skill set was really good getting the business from 0 to 2 or 0 to 5, but they may not be the right person to take it from 2 to 10 or 5 to 20, right? And so looking for those founders that really care about the business, know that they may not be the person to lead the ship forward. That's a really good fit for me, and I think a really good fit for this model particularly.
Great. Then on the other side of that table, what's your advice for people running businesses? What do you tell those startups to do before they go out to raise funding?
Oh, yeah. I mean, I talk to a lot of early stage people who are not ready for a full exit, right? They're either really early and raising early stage capital or they're off to the races. I typically see a lack of focus on key SaaS metrics, especially if they haven't had any institutional investors in their group yet. Making sure you're understanding the metrics behind a B2B SaaS business, what's the fuel in the tank, if you will, is going to be key and will help them both raise money more easily. It'll help an investor diligence the business more easily, but it'll help them truly understand kind of where their business stands and benchmark it against other similar products. I see a lot of founders sort of missing that piece of it. And so when I come in to look at the business to buy it, we're often starting from scratch on building out those metrics. And then once we determine the metrics, it often reveals, hey, these are some places you could tweak and tune and improve to get yourself either ready for a full exit to someone like me or more ready for maybe a Series A, B round, which wouldn't be me, but would be more kind of a traditional VC path.
Well, great. So let's talk about the state of startup investing today. How do you see the industry evolving in the current market?
Yeah, it's interesting. So particularly for me, which is focused on buyout instead of pure growth investing, there is more private equity appetite to come down market, I think, on deal size, which is creating some interesting opportunities for even smaller businesses to sell majority stakes. The other thing I'm seeing, Hall, at least in this last year, lots of emphasis on cash flow and profitability, more so than historically, just given people's sensitivity to where the economy might go. Formerly, if you looked at a business and it was 60% growth, 0% net EBITDA margin, like that's a great software investment. Let's do it. In my world, now investors, what's the rule of 60 business? Now investors might prefer, hey, it's rule of 60, but actually 30% growth, 30% net margin makes us feel a lot better. I'm just seeing more emphasis on that side of the table than growth at all costs, despite profitability. I'm seeing a little bit of that.
Well, great. And you deal a lot with SaaS businesses. What do you think is the biggest change we'll see in SaaS businesses in the coming years?
Oh, it's fascinating. I think you'll see more emphasis on retention as a key metric, particularly if the economy gets challenging. I think retention really is a measure of how critical is your SaaS product to your end user. That's something I'm highly focused on when I'm looking at a potential business, is that criticality metric and how that criticality metric is reflected in churn metrics. So I think we'll see more emphasis on that. Yeah, I recently looked at a business in kind of field services SaaS. The business had really, really nice top line growth, but the retention metrics were below industry norms. It raised some significant concerns for us on sort of what's the viability if we can't achieve that growth rate going forward. So it was a bit of a challenging one. And that founder is now working on those retention metrics, right, as his focus area. So I see that being a big point of emphasis kind of in the next 2 years in B2B SaaS investing.
Great. Well, let's talk about your investment thesis for the search fund. What exactly is it, and what exactly are you looking for?
Yeah, so my thesis is centered around probably a more bootstrapped or maybe angel, lightly funded B2B SaaS business. I like vertical markets, so SaaS businesses targeting a particular in-market as opposed to a horizontal SaaS business serving all industries. And I can talk about some of those verticals I've focused on and where I like to play. But in general, vertical B2B SaaS, I like businesses in this kind of 2 to 6 million ARR range. So they've hit this inflection point where they're not chasing product market fit. This business has staying power. It's got real customers. It's got real growth. It's got real employee and team. But it hasn't built the machine so much that they've hit this, 10, 15, 20 million of ARR business where they're really in kind of a different ball game and a different league at that point. And I'm looking for that founder, like I mentioned before, that really loves that product market fit stage. But as they do more finance and HR and that organizational process building that you do when the business hits 2, 3, 4 million of ARR, that's where I could add a lot of value and kind of help push to that next growth level. And I'm a big believer that businesses need different leadership at different times. So that is my kind of perfect thesis. I think there are a bunch of businesses out there. And a lot of times because they're vertical, these businesses they can't really raise traditional VC money. The TAMs aren't big enough. And that creates an opportunity for a buyout player like me to come in and say, we can get you a really nice value for your business. We can scale it, but we're not going to be up against the VC-backed startup over here that's just burning cash to acquire customers. And so that's a good fit for a searcher like me who wants to come lead a business for the next 5 to 10 years.
Well, it sounds like you like vertical market SaaS. Aside from the economics of it, what else do you like about them? Why do you choose vertical SaaS?
Yeah, I mean, certainly we talked about the economics. We talked a little bit about it's a nice place to play in because the bar is higher to raise VC money if the TAM is too small. So that can create some nice barriers to entry for someone like me. I also like it on that criticality piece we touched on earlier. Like these processes tend to be critical to the end markets they're serving, which I appreciate. There tend to be not a lot of great alternatives. And I often like it because the founders are often industry experts or industry people that saw a problem in their industry and then are circling back to fix it. I'll give a quick example. I looked at a nonprofit tech business recently that was helping nonprofits essentially budget for the year. This is a person who worked in nonprofit accounting, realized that budgets were a major pain point for nonprofits. Right? Their nonprofit leaders are not accountants. They're typically not very financially savvy. So I created a simple SaaS tool that allowed nonprofits to more efficiently budget for the year. Great niche vertical SaaS product, right? And a great example of what would be a good fit kind of on multiple levels. So low vertical markets, think it's a great place to play for kind of small buyout. And it has been a good fit for me to meet industry experts and go deep in these verticals.
Right. We talked about criticality being one of your key criteria. What are maybe a couple of other key criteria you look for in these vertical SaaS startups that you were looking for to acquire?
Yeah, key criteria, top 3 would be like you got to have some growth. No growth is scary. So I certainly look at growth. certainly look at profitability, kind of how efficient are they with capital, which is one of the reasons I really like more bootstrap businesses. They tend to be pretty capital efficient. The founders had to be capital efficient, maybe at the expense of growth, but that could be a good fit for me to say, well, let's make a couple strategic investments and increase growth, but not lose kind of our profitability focus. I like that. And then thirdly, of course, criticality, which I think is certainly reflected in churn. The other thing I'll mention that it's not so much a investment criteria, it's a personal criteria. I'm going to go run this business. There's a values and culture component that is highly important, if not the most important thing for me, because I'm going to go spend 10 years helping lead and grow this thing. If that doesn't check the box, they can have the best metrics in the world, and that's not going to be a great fit for me. So that's sort of mission critical number one is, are the values and cultures aligned with what I want out of my career in business? And then, certainly we got to get to the tactical SaaS metrics.
Great. Well, I always ask this question, what online resource do you find most helpful for your work?
Oh, that's a great question. There are many. I'll mention two that I found extremely helpful for deal sourcing, because I do a lot of proprietary deal sourcing. I think that might be helpful to this audience listening. One, I use a lot of Grata, Grata, Grata. I think they're a Series B startup. They're essentially a web scraper for private company info. So think of it as a sort of a search engine, Zoom info, LinkedIn, Crunchbase. It's pulling all that data in, plus it's pulling proprietary information from these businesses' websites via web scraping and allowing the user to quickly source, list, build, find information, make quick determinations on what is this business, what do we know about them publicly, and then where do we want to go from there. So I use that for a lot of my outreach. For example, if I wanted to go build a list in nonprofit software, I could do that pretty easily using that Grata tool. I'm a big fan of that. That is a paid resource, but a lot of private equity is picking Grata up recently, so it's been pretty popular. The other one I would highlight just in terms of contact finding that I've found recently that I don't know how popular it is yet, is called seamless.ai, a great email verification and finding tool. They've got a great LinkedIn plugin where I could go to your LinkedIn profile, I could hit a button, it would pull up what it thinks is the correct email address for you, the percentage likelihood that it's correct, phone numbers, addresses, whatever information it could gather, which allows me to then do some kind of thoughtful prospecting. And again, I'm not spamming people. I'm highly relational in this. It has to be relational, but sometimes you got to find somebody's email, right? And I found that to be the best tool to do that from the ones I've tested thus far.
And that's called seamless.ai?
Seamless, like a seamless
seamless,
process.
I got you.
Seamless.ai. And then the other one is called Grata, Grata. Both paid software tools, but great businesses, and highly recommend if you're doing any sort of kind of outbound prospecting.
I'll have to check those out. Well,
Yeah.
in the last few minutes that we have here today, what else should we cover that we haven't?
That's a great question. I would just highlight, again, the search model is unique amongst exit options in that you really got to build a relationship with the entrepreneur that's going to run your business. And so for folks out there considering an exit, there are a lot of options available to them. And I would encourage those folks to think about kind of fit first and foremost in terms of what they want their relationship with their buyer to look like. And then let that fit inform the types of parties you engage with along the way. And certainly, go make sure you get paid highest price for your awesome business, but don't let that fit piece slip away as you're thinking about who's going to be the steward of your business. That's what I'm passionate about, right? It's not, hey, let's go buy 1,000 businesses. It's let's go buy one, be really thoughtful about it and steward it well. And I think by doing that, I can provide a lot of value for a founder that really, really cares about that. But it's tough out there. It's tough to find a good deal. So you got to stay the course. I would encourage investors just to stay the course right now, can stick to their criteria and be patient.
Great. So how best for listeners to get back in touch with you?
Yeah, a couple different ways. Would love to connect on LinkedIn. And again, if I can't be a direct help, I love connecting people. It's one of my favorite things to do. So would love to be helpful any way I can. And Holly, you've done that for me. So I really appreciate the way you've connected me and your network. So thank you. So yeah, LinkedIn's great. Matt Brugner. I think the bio will, the LinkedIn will be in the show notes. So hopefully it'll be there. Email's great. Matt@stewardship-partners.com. Those are great ways to connect with me. I'd love to speak with anyone who's interested in the search fund model, in business succession, B2B vertical SaaS. Happy to help on any of those fronts.
Well, great. We'll put those contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Yeah, thanks for having me. Hopefully I'll be a CEO by the next time we talk. Thanks.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.